Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. In this video, we will be talking about 5 fundamentally sound mid-cap stocks that are worth investing in right now. Please watch this video to know more about these stocks. Now the first stock on the list is Cummins India Limited, which is available at 669.05 and the face value for it is 2. The symbol for it is CUMMINSIND. Now Cummins India Limited is a manufacturer of diesel and natural gas engines, generator sets and related services. The company operates through 2 segments, which is basically engines and lubes. Its 3 businesses include engine business, power systems business and distribution business. Now the 1-year chart would show that this stock has been on a continuous downtrend throughout the entire year. Now Cummins' shares have been underperforming for quite some time now, mostly owing to the deterioration in its ROI profile, adverse business climate both in India and abroad in the past 2 years, and dilution in equity base have contributed to the fall. Analysts are now confident, however, that earnings will recover on the back of rising volumes in industrial business and cost-saving measures. The downside could be limited from the current levels, and Cummins India can surprise a rather skeptical market on the margin front, is what Kotak Securities has to say. Now, if we were to look at it, the market cap of the company is 18,546.07 crores, which means that the stock is a mid-cap one. The EPS of 25.56 translates into a price to earnings ratio of 26.18, which is largely in line with the industry PE of 24.78. The book value of the company is 160.56, which translates into a price to book ratio of 4.17. The debt to equity is on the lower side at 0.0008, whereas the return on equity is a decent number at 0.2071. Now the dividend yield provided with the company is also a decent number at 2.09, and the promoter holding is just about average at 51%. Now the second stock on the list is Indraprastha Gas Limited, which is available at Rs 255.80 and the face value for it is 2. The symbol for it is IGL. Now Indraprastha Gas Limited is an India-based city gas distribution company. The company's business consists of sale of natural gas. The company is focused on industrial and commercial businesses and supplies compressed natural gas to the transport sector and piped natural gas to the domestic, industrial and commercial sectors in Delhi and the National Capital Region. Now the 1-year chart reveals that this stock was on a beautiful uptrend for the first half of the year, but since then has been declining gradually. The market cap of the company is 17,906.02 crores, which means that the company is a mid-cap one. The EPS of 9.58 translates into a price to earnings ratio of 26.70, which is cheaper compared with the industry PE of 31.62. The book value of 51.39 translates into a price to book ratio of 4.98, which is a bit on the higher side. The company has a debt to equity of 0.1922, whereas the return on equity is 0.1914. The dividend yield for the company is 0.66, whereas the promoter holding is just below average at 45%. Now IGL shows strong traction in gas volumes led by increased conversion to gas by private vehicles as well as higher connections coming in from industrial users. It continues its geographical expansion as well. After the recent correction, IGL is priced attractively relative to its growth potential. HDFC Securities is very bullish on the positive fundamentals of IGL, led by a monopolistic business model, a strong balance sheet and forays into newer geographies. Now the third stock on the list is NBCC India Limited, which is available at 82.90 and the face value for this stock is 1. The symbol for it is NBCC. Now NBCC India Limited, formerly National Buildings Construction Corporation Limited, provides civil engineering construction services. The company operates through 3 segments: project management consultancy, which is PMC, real estate development and engineering, procurement and construction, which is EPC. Now the 1-year chart again has a similar pattern, which shows a spike towards the middle of the year, but since then the company has had a very aggressive fall. The market cap of the company is 14,922 crores, which is a mid-cap market capitalization, and the EPS is 1.85, which translates into an expensive price to earnings ratio of 44.81 when compared with the industry price to earnings ratio of 29.53. The book value for the company is 9.30, which again translates into an expensive price to book ratio of 8.91. The debt to equity here is 0.5865, whereas the return on equity is 0.1939. Now, the thing to remember here is that this company would be at the forefront of infrastructure spends by the government and would be the primary beneficiary for government's largesse. The dividend yield for this company is 0.98, whereas the promoter holding is a strong factor at 74.29. Now, NBCC's order backlog remains strong at nearly rupees 80,000 crore, providing healthy earnings visibility going ahead. Execution of existing big ticket projects related to the redevelopment of colonies and railway stations is expected to pick up pace in the coming year. It is also in negotiations for securing more projects in coming months, adding to its pipeline. The sharp correction in its stock price allows good entry point for investors. We like NBCC given its unique business model, PWO status leading to awarding of contract on nomination basis and huge opportunities ahead is what ICICI Direct has to say. Now, the fourth stock on the list is Natco Pharma Limited, which is available at rupees 818.90 and the face value for the stock is 2. The symbol for it is NATCOPHARM. Now, Natco Pharma Limited is a pharmaceutical company. The company is engaged in developing, manufacturing and marketing finished dosage formulations and active pharmaceutical ingredients. The company's segments include active pharmaceuticals, ingredients, finished dosage formulations, job works, pharmacy and others. Now, the 1-year chart reveals that this stock has been on a choppy ride. For the first half of the year, there were huge spikes on a couple of occasions, but since then the company has been a rank underperformer. The market cap of the company is 15,108.16 crores, which means that the company is a mid-cap one. The EPS of 37.84 translates into a price to earnings ratio of 21.64, which is much cheaper when compared with the industry price to earnings ratio of 29.43. The book value of 130.08, however, translates into an expensive price to book ratio of 6.30. The debt to equity is 0.0897, whereas the return on equity for this stock is a strong number at 0.2949. The dividend yield is 0.89, whereas the promoter holding is above average at 51.19. Now, Natco's focus on limited competition and niche offerings are expected to give it a leg up over many of its peers affected by severe price erosion in the US market. The company plans to shift focus to other markets like India, Brazil and Canada. Its strong momentum in the domestic oncology segment is expected to continue. Now, Anand Rathi shares and stockbrokers says that considering Natco's strong oncology portfolio, healthy balance sheet and sharp focus on complex filings in the US, they are very upbeat on the business. Now, the final stock on the list is Reliance Nippon Asset Management Limited, which is available at rupees 215.30 and the face value for this stock is 10. The symbol for it is RNAM. Now, Reliance Nippon Life Asset Management Limited, formerly Reliance Capital Asset Management Limited, is an asset management company. The company is the asset manager of Reliance Mutual Fund. The company has its business in asset management, life insurance, general insurance, private equity, stock broking and other activities in the financial services sector. Now, the 1-year chart reveals that this stock has been on a continuous downtrend after listing. There were phases when this stock outperformed, but it has not been able to hold on to the price movement. The market cap of the company is 13,176.36 crores, which means that the company is a mid-cap one. The EPS of 8.25 translates into a price to earnings ratio of 26.10, which is much cheaper when compared with the industry PE of 36.14. The book value of 48.13 again translates into a price to book ratio of 4.47, which is a bit on the higher side. Now, one factor for this company which is seemingly strong is the promoter holding, and it stands at 85.75%. A well-entrenched player with a diversified asset base, Reliance Asset Management Company is well positioned to capitalize on the rising equity investment culture. The high run rate of sticky retail SIP inflow bodes well for the company's AUM growth. A wide distribution network reaching far into smaller town reduces the risk to its flows. Now, MK Global says that they expect the company to maintain their leadership position and incrementally benefit from the company's efforts to penetrate the B15 and B30 locations. Now friends, please don't consider these to be recommendations on our part. This was a compilation which was done on Economic Times and is a compilation from the top stock picks from various brokerages. We will be providing the link to the article in the description section. Also friends, please don't consider any of the content that you see on this channel to be recommendations on our part. Please go ahead and do your own research. This and all other content that you see on this channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.